On April 14, 2026, Arthur Vance opened a letter from the IRS and watched 40 years of honest work turn into a financial crime scene. He didn't make a bad stock pick. He didn't fall for a phone scam. He was hit with a mandatory $38,000 tax adjustment for doing exactly what the federal government told him to do. Arthur was 61 years old, a senior logistics supervisor from Ohio. He wasn't a gambler. He was a man who measured his life by discipline, safety, and silence. But hidden inside a new federal tax law passed by Congress was an invisible landmine waiting for everyone turning 60. Arthur sat at his kitchen table. The morning coffee was still warm in his cup. Across from him sat his wife of 34 years, Linda. She watched his face go pale.
"Arthur,"
she asked quietly.
"what is it?"
He couldn't answer. Because how do you tell the person you love that the money you promised would keep her safe was just quietly confiscated by the system you trusted your whole life? 2 years earlier, in late 2024, Arthur and Linda sat down with their trusted tax planner of 20 years, David Miller. Arthur had one goal. He wanted to retire at age 63.
"David,"
Arthur had said, leaning over the desk,
"I'm 60 years old. We have 3 years left. I need to pour every extra dollar into my 401k.
David smiled and tapped a fresh document on his desk.
"Arthur, you picked the perfect year. Congress just passed the Secure 2.0 Act. They created something called the Super Catch-Up."
It sounded like a blessing from heaven. Under the new law, workers aged 60, 61, 62, and 63 were granted a special rule. You were legally allowed to dump thousands of additional dollars into your retirement account to lock in your final paycheck. Arthur felt a surge of hope. He went back to his office the next morning and signed the papers with Karen, his company's HR director. Karen handed him the receipt.
"You're all set, Arthur. You're fully maxed out."
Arthur walked out of that office feeling invincible. He thought he was building a fortress. He had no idea he had just walked into a legal trap. For 18 months, Arthur watched his paycheck shrink while his retirement balance grew. He and Linda cut back. No anniversary trips, no new car. They ate at home. They bought store-brand groceries. Every time Linda worried about their monthly budget, Arthur would squeeze her hand.
"It's temporary, honey. Once I turn 63, we are safe forever."
But inside the financial engine of the 2026 tax code, a gear had shifted that nobody warned him about. Congress had added a hidden clause to the super catch-up rule for high earners making over $145,000. It mandated that any catch-up money could no longer be deducted from your taxable income today. It was forced into a Roth classification. Arthur didn't notice the subtle shift on his pay stub. Karen in HR didn't understand the complex payroll recoding. Without realizing it, Arthur's taxable income didn't go down as he saved. It shot straight through the ceiling. He wasn't just saving money, he was accidentally building an income spike that was about to trigger an automatic federal ambush. When Arthur brought that terrible April letter back to David Miller's office in 2026, the room was dead silent. David put on his glasses, reading the IRS notice 3 times. His face dropped.
"Arthur,"
David whispered.
"Oh no."
"What do you mean, oh no?"
Arthur demanded, his voice cracking.
"I used the super catch-up. You told me to use it."
"I did,"
David said, his hand trembling slightly.
"but because your employer's payroll didn't process the mandatory Roth conversion correctly under the 2026 Secure 2.0 mandate, your adjusted gross income hit a threshold you were never supposed to touch."
The tax dominoes began falling in real time. Because his reported income artificially spiked, the government automatically reclassified his household. First, his tax bracket jumped. Second, he triggered a massive Medicare IRMA surcharge penalty. Third, the tax write-offs he counted on for Linda's medical care vanished. He didn't just owe back taxes, the government was clawing back his Medicare subsidies and imposing penalties for non-compliance. $38,000 due in 30 days. Arthur drove home that afternoon in total silence. He didn't turn on the radio. He just stared at the highway lines passing beneath his truck. He realized the most terrifying truth of all. The system wasn't broken. The system worked exactly as it was designed to work. The fine print wasn't written to help him retire at 60. It was written to force senior workers to keep working until 67, because the government couldn't afford to let them leave the workforce. Arthur pulled into his driveway. He looked at his house. The house he promised Linda would be paid off by summer. He knew what he had to do. He had to walk into that kitchen, look into the eyes of the woman he loved, and tell her that retirement was gone. He would have to work 4 more years, minimum. Linda opened the front door, looking at him with worried eyes. Arthur swallowed the lump in his throat.
Linda,
He said, his voice barely a whisper.
they got us.
If you were between the ages of 55 and 63 right now, you might think your retirement plan is safe because you followed every rule on paper. But as Arthur found out, the rules you signed 5 years ago are not the rules they are using to calculate your final paycheck today. The next morning, Arthur put on his steel-toed boots. He drove back to the logistics center. He was 61 years old, but that morning, stepping onto the concrete floor, he felt 80. Financial trauma doesn't just live in a bank account, it lives in your bones. For weeks, Arthur walked through his life like a ghost. He took double shifts. He stopped sleeping. Linda would find him at 2 in the morning staring at the glowing screen of his laptop, scrolling through hundreds of pages of IRS tax code, desperately looking for a way out. He felt a deep, suffocating shame. He had trusted his company. He had trusted the government's new law. But one night, deep in a legal forum meant for tax attorneys, Arthur found a thread. It was written by a man named Marcus Thorne. Marcus wasn't a standard strip mall accountant. He was a forensic tax auditor in Chicago, a guy hired by wealthy estates to fight the IRS. Marcus had posted an article titled, "The 2026 Employer Payroll Glitch Destroying Senior Wealth." Arthur's heart started to pound. He wasn't alone. He picked up the phone.
It's an automated massacre, Arthur.
Marcus's voice on the phone was calm, clinical, and sharp.
The Secure 2.0 Act forced that catch-up money into a Roth.
Marcus explained.
But your company's HR software wasn't updated to code it properly for the IRS. The IRS computers saw it as undeclared, unprotected income. They triggered a silent audit, slapped you with a penalty, and jacked up your Medicare IRMAA premiums.
Arthur gripped the phone.
My accountant said it's a done deal. He said I have to pay the $38,000.
Your accountant is a historian.
Marcus said bluntly.
He just records what happened. We're going to perform an autopsy on this tax return and bring it back to life.
Marcus told Arthur that the IRS relies on seniors getting scared, writing the check, and giving up. But there was a back door. A 3-step legal maneuver designed specifically for administrative failure. Arthur felt a tiny flicker of hope, but he also felt terrified. If this failed, the legal fees would bankrupt him faster than the IRS. The plan was aggressive. Step 1. Arthur had to confront Karen in his HR department, not to yell at her, but to get her to sign a sworn corporate affidavit admitting their payroll software failed to execute the 2026 Roth mandate. Step 2, Marcus filed an immediate retroactive recharacterization of the funds. They weren't fighting the tax law, they were fighting the classification of the money. And step 3, the most important piece of paper a senior can ever hold, Form SSA 44. It's the hidden government form used to appeal a Medicare IRMAA surcharge based on a life-changing event or systemic error. Most seniors don't even know it exists. They bundled the affidavit, the revised code, and the SSA 44 into a single bulletproof package. They mailed it via certified overnight delivery. And then the worst part began. The waiting. You see, sending a defense to the IRS doesn't stop their automated collection machinery. A machine doesn't care that you filed an appeal. 30 days later, Arthur received a notice of intent to levy. The IRS was threatening to seize funds directly from his checking account. Linda cried in the kitchen. She packed a box of belongings, convinced they were going to lose the house.
We should just pay them.
She begged Arthur one evening, her voice breaking.
Take it out of the 401k. Just make it stop.
Arthur looked at his wife. The exhaustion in her eyes broke his heart.
If we take it out of the 401k to pay them,
Arthur said softly,
we trigger another penalty. We lose everything. We have to hold the line.
Every day Arthur walked to the mailbox felt like walking to the gallows. Spring turned into summer. The stress was eating him alive. Until a Tuesday afternoon in late August. A thin white envelope was waiting in the box, Department of the Treasury. Arthur didn't even go inside. He stood on his driveway, hands shaking, and tore the envelope open. He scanned the dense bureaucratic text. His eyes locked onto a single bolded line halfway down the page. Penalty reversed. Adjusted gross income restored. IRMAA surcharge dismissed. Current balance due $0.00. Arthur dropped his head, letting out a breath he felt like he had been holding for 6 months. He walked inside, handed the letter to Linda, and pulled her into his arms. They were safe. The retirement they built was intact, but Arthur was changed forever. He realized that the golden years aren't a guarantee. The system isn't watching out for you. In the modern financial world, innocence is treated like a crime, and blind trust is the most expensive mistake you can make. You can't just save your money anymore. You have to defend it. If you want to know the exact hidden triggers lurking in your 401k before the government finds them, subscribe to The Final Paycheck, because the rules have changed and no one is coming to save you.